Hi everyone, this is Bag of Dawn at StockMarketCaddy.com. It is March 4th at about 8 p.m. and wanted to comment on the markets today. And our perspective really has not changed much. You're looking at a daily chart though. This is a daily chart of the S&P. And we generally don't do too much when it comes to candle work, but it was an interesting development today that took shape, and I want to share this with you. And we also want to share with you a thought that may have happened. Now, we talk about all the time that we are technical traders, and we are both technical, mechanical traders. We're aware of the news, the noise of the day, but for the most part, we don't very rarely are we trading on the basis of that. If anything, we might be exiting some positions, but very rarely would we ever, if ever, initiate a position. So the latest noise of the day was this, Ukrainian thing, which really has been going on for some time here. It seems like almost 10 days or so, but it manifested itself on Sunday night, and the markets, gapped down on Monday. And we think in part the action today has a lot to do with that. We talk about things happening in the market, not really from a technical standpoint, but because of the structure of the market, there are things that occur, seemingly over and over again. For instance, we will see many times the Wednesday or Thursday before an options expiration, we will see prices pull back, and then a lot of times on an options expiration, we're talking options for stocks that week, will tend to have a tendency to have a flat to upward bias into options. We also see a tendency for the markets to be flat to up, mostly up on the first day or two of the month, as the 401k money that is accumulated from the month before is put to work by the mutual funds. And that aspect of the market, we think, may have come into play here, in that on Monday would have been the first day of the month, March 2nd, that the February money and the mutual fund money would have been normally coming into the market yesterday. But we think, we won't know, we'll probably get a better idea in the next couple of days, that the mutual funds, the market gapping down some 200 points, and with the heavy news of Ukraine, may have decided to hold back their purchases. And then when the noise broke overnight that maybe that Putin was backing down and it was going to be such a big deal that they were prepared to calm it down, that some big hedge fund got in there, jammed the futures to sell to the really dumb money, the 401k money. Unfortunately, today in the market gapped up on the juice of the futures and just hung up here all day as the smart money was selling to the the 401k money. Now we were as well selling and taking a aggressive short position. We have it hedged, so if you're doing any shorting, please use options and or hedge them. But what is setting up, and it'll be interesting what happens tomorrow. This could be any number of things. It could be a breakaway gap, as we saw back here in January of the year before last. A breakaway gap that never got filled and the market just took off. Or if the market was to gap down tomorrow, this would qualify, be a confirmed, what we call an abandoned baby. The market would abandon this. Anybody who went long up here, all that February 401k money would be a dead duck sitting up here. We would gap down, we would have the makings of an abandoned baby, and down we would come. And that would most certainly be a significant and unique structure that doesn't happen a whole lot at a top and at a turning point. So it's always been curious how this market was really going to top out. Now, fundamentally, we really don't get into it that much. We might look at some sectors, and the money certainly rolled into the financials a little bit and into the transportation, but really did not make any new highs there. So we're not too concerned on that front. We still think that we could be ripe for a pullback, minimum pullback. maybe something more. And also to the interest rate structure. In order for this market to go higher, we would have expected the yield on the 10-year bond to be, at 3% and moving higher in the bond market, confirming the growth of the economy. And so we're not getting that. What could be the catalyst tomorrow? You never know. We're not going to speculate in the news. Could be the jobs number. We get one every month. But we're going to be paying very close attention to the opening on the SPYs. And what do? Do they leave this 401k money up here and head on down? Let us show you our trade manager. This is not our trade manager, but our radar running our proprietary strategy. So you can see here on the S&P, all time frames solidly long all the way. We do continue to hold have these high divergences on the longer months. So some of these basket of technicals that are proprietary to us are not necessarily confirming these highs. Not a signal in and of itself to be going short, but just something to be aware of. We still have on the VIX, though, excuse me, a long on the daily, and this is a contrarian indicator. So there are still puts being purchased, and they could be just hedges for long, but there could be something else to it. So that's where we are. Market still solidly long. We will continue, whether it be tomorrow, hopefully tomorrow, but we will continue when we get our short signals on the shorter time frames to take those trades, earn what we can, protect if we go higher, and see if we can hedge and wedge into something more meaningful. But let's see what happens at the open. And just to show everyone, excuse me, still fighting a bad cold, we'll bring up our trade manager and we'll organize our strategies. And you can see that we manage not just the VIX. This is in a futures market. We don't have positions in all of these. They are a representation of many of the trades that we take, but a representation of how we move ourselves into markets mechanically, disciplined on 60, 240 daily, weekly, and monthly. And I'll force rank these in terms of, tell you what, we'll start with some losses. We do get losses. Generally, because we're trading a mechanical system, those losses are relatively small. We do have a flat position, and then building up, these are our profits, more flat positions on all the markets. There's no way that we could ever trade all these multiple time frames and on multiple markets without a disciplined mechanical system, and that's where we bring everyone back to this trade manager. So at the moment, if you haven't been along on the weekly and the monthly, yeah, it would be very, very risky in our view to be trying to get in there now. If you're trying to short, stay small, stay on the smaller time frames. Excuse me, try to get to a mechanical system, try to grab what you can, and if you're fortunate enough to be in there and keep plugging and plugging away, we'll ultimately break the backs of the bulls. But watch that. I'm not saying it's going to happen tomorrow, but watch that gap that was established today. Let's see if we gap below that and get going. If not, this may continue. And there's another structural aspect of the markets, the futures markets. The front month for all the indices is March, and that contract expires the third week of March. And a lot of times the bears will not take a position if the contract is, for the most part, shot, and they may wait until the contract actually expires and we roll into April. So we may see a flat to slowly pull back market. Be prepared for that, and then maybe one last squeeze of the shorts on the March contract, and we may not see any hard selling again or bearish activity until maybe the first or second week of April, which also coincides with our time analysis. Let me show you this. This is the old weekly chart that we had drawn up many moon ago. Continues to be in play. And look where we are. We thought the major resistance at 1776, we're almost 100 points over that, up into this area. We think we're extended on weekly time frame, monthly time frame, even the yearly time frame, and that the cycle we had projected, bring this into view, would have been right in around here, which would put us about still another 3 or 4 weeks that we would really be extended on time. But we still think we are here. And this is this little action this week. And has the makings, I'm still in a candle format. Let me quickly go to a line on close style, which we're fans of. And here it is. Here's the line on close. This little move up here this week should turn down, wouldn't even register, and would be down through here, confirming a little head, left shoulder. This would be the right shoulder, and away we go. So this is that time projection. Good luck, folks. Be careful. Again, if you're shorting, stay small, stay hedged, use options, protect yourself.